Bourse Report. I'm Carissa Gopin, an investment analyst at Bourse, and I'll be filling in for Sarud. Today, we'll be taking a look at the financial performance of two companies in the manufacturing sector, Angostura Holdings Limited, AHL, and the West Indian Tobacco Company Limited, WCO or WCO, for their respective full-year period ended December 31st, 2025. Angostura reported improved earnings supported by higher revenues, while WCO continued to face persistent revenue and margin challenges. So firstly, let's take a look at Angostura Holdings Limited, or AHL. Angostura reported an earnings per share of 74 cents in fiscal 2025, up 5.7% year-on-year from 70 cents recorded in fiscal 2024. Revenue increased 5.1% from 1.06 billion to 1.12 billion in the current period. Profit before tax advanced 9.5%, moving from 193.7 million to 212.1 million. Overall profit for the period increased 6.3% from 144.3 million to 153.3 million. So taking a closer look at Angostura revenue trends and revenue by regions, overall revenue showed a steady increase from 922 million in fiscal 2021 to a current 1.12 billion in fiscal 2025. Local revenue in this red color accounted for 58% of total revenue and would have increased modestly, up 2% year-on-year from 636 million to a current 649 million. So this increase was supported by solid sales through its Solara retail outlets and expansion in its ready-to-drink portfolio. However, this increase was partially offset by a fall in local rum sales. Export revenue accounted for 42% of the group's total revenue and remains a significant growth driver as the group continues to expand across regional and international markets. So export revenue increased roughly 10% year-on-year to 469 million in fiscal 2025. So taking a closer look at Angostura margins, so margins would have remained relatively stable year-on-year, with its gross profit margins moving from 45.8% to 45.5% in the current period. Operating profit margin also declined marginally from 16.5% to 16.4%. Profit after tax margin increased to 13.7%. This marginal increase reflects a marginally higher profit per dollar of revenue. So at a price of $10.55, Angostura trades at a PE ratio of 14.3 times above the combined manufacturing sector average of 10.9 times and offers investors a dividend yield of 3.7% below the sector average of 11.8%. So on the basis of revenue growth but tempered by market uncertainties arising from higher excise duties and evolving consumer spending patterns, Bourse maintains a market weight rating on Angostura with a watch outlook for the time being. Turning quickly to the West Indian Tobacco Company Limited, or WCO. So WCO reported an earnings per share of 43 cents in the fiscal 2025 period, down 36.8% from 68 cents recorded in the prior comparable period. Revenue continues to remain challenged, down 18.6% to 507.4 million. Profit before tax also fell to the 8.2% to 168.2 million, and overall profit for the period amounted to 109.8 million, down 36.3% year-on-year. So looking at WCO's revenues over the years, so revenues would have decreased roughly 40% from 852 million in fiscal 2021 to 507 million in fiscal 2025, despite a brief rebound in 2023. The decline in revenue year-on-year was mainly driven by lower domestic sales and increased competition within the market. However, the group has undertaken several portfolio adjustments to better align with consumer demand. Looking at Whitco's operating margins, the margins are currently on the lower end of the spectrum. So gross profit margin fell to 53.3% in the current period, while operating profit margin also would have fallen from 43.1% to 32.8%, despite a 16% reduction in total expenses across the group, as weaker revenue would have offset the benefit of lower expenses. And overall profit after tax margin stood at 21.6% in fiscal 2025. So looking at Whitco's earnings per share and dividend trends over the period, so earnings per share has come down from $1.50 in fiscal 2021 to a current 43 cents, and as well as total dividends moving from $1.42 to a current 41 total payout of 41 cents in fiscal 2025. So as earnings have fallen, dividends have also come down, reflecting reduced profitability over the years. So dividend payouts are likely to remain relatively subdued given the current earnings environment. So Whitco trades at a current price of $2.86 and trades at a trailing PE ratio, a relatively attractive PE ratio of 6.7 times, below its sector average of 10.9 times, and offers investors a dividend yield of 14.3%, above the sector average of 11.8%. So despite relatively attractive PE valuation, continued revenue and margin pressures, along with market uncertainties relating to higher excise duties and increased competition, Bourse maintains a market weight rating on Whitco with a watch outlook for the time being. And that brings us to this week's edition, the end of this week's edition to the Bourse Report. For more information, please give us a call at 226-8773 or email us at info@boursefinancial.com. Thank you for joining us, and we'll see you next time on the Bourse Report.